Hello and welcome to another SPAC Insider podcast, where we bring an independent eye in interviewing the targets of SPAC transactions and their SPAC partners. The London Stock Exchange has seen several of its companies decamp for Wall Street this year, and SPACs have become a new avenue for those companies to skip across the pond. I'm Nick Clayton, and this week my colleague Malin Haddad and I speak with Hervé Tesler, CEO of Noventic, and Jerry Leder, CFO and COO of Corner Growth Acquisition Corp. They explain why they think Noventic will be better valued on the NASDAQ following the close of their $800 million combination announced in May, and how Noventic's own operations as a digital transformation facilitator are ramping up in the developing world. Take a listen.
So we've seen a lot of companies opt for the SPAC route to uplist from smaller international or domestic exchanges, but Noventic is currently listed in London, which some would consider to be on par with the NYSE or NASDAQ. So what spurred the move for you?
Well, I think the move is a natural step in our growth plans. We've been public at the London Stock Exchange since October, November 2021. When we look at the current share price and the liquidity, we are not satisfied. We're not happy. We don't think that the current valuation is reflecting the real value of our business. And then we had a lot of work with the board looking at different options. And we ended up partnering with Corner and thinking with Corner together that moving the company to NASDAQ would be absolutely the best thing to do to basically get the company valued as per its real worth, gain access to capital with tech-savvy investors so that we can keep investing for the growth of the business.
Jerry, you've seen a ton of changes in the SPAC market since Corner Growth's listing in December 2020. So why was Noventic a good fit?
So Corner has actually been a technology investor for over 20 plus years now. And we really have a strong network of technology founders and operators, public company operators, executives, and board members, and venture investors. And we really wanted to work very closely with them. And the perfect fit for this transaction and for the U.S. public markets. And we really believe we found that in Noventic. So first of all, Noventic really has strong secular tailwinds in IT digital spend, as well as digital transformation where they operate. And they really operate in those emerging growth markets where we're really seeing those strong secular tailwinds. Secondly, Noventic has had the ability to really show steady growth consistently for organic growth and inorganic growth on the revenue side, and being able to do that both profitably in these emerging growth markets, and specifically in areas like India, where they've been able to grow their talent team, really grow that product offering services, and really grow geographies and scale. And third of all, Noventic really has just a tremendous world-class management team led by Hervé here, who has led a very large global organization, as well as a superior senior management team who's really helped drive the public company readiness because they've already been public on the LSE for some time. So we're very excited to be partnering with Noventic.
Right. And on that note, Hervé, you had a long vantage point on the digital transformations happening at companies with your experience at Xerox. So what did you take from your years there, and how has that informed your strategy at Noventic?
It's a very good question. I think there's a couple of things. First of all, I brought management experience. What I brought as well is the last decade at Xerox, I've spent a lot of time being involved with emerging markets. I run the emerging markets. I lived in a number of these emerging markets. So I joined Noventic with that natural background. I know how you operate in these countries. I know the different cultures. I like it, which is very important. It's not just about you know it. It's about you need to like it because you need to like traveling into these countries, engaging with people, looking at that diverse, fantastic talent pool. It's not always easy, right? Because you have to shift and there's no one size fits all. So I think what I brought from Xerox is because I moved in so many roles at Xerox, including in these emerging markets, I brought that. The other side of my Xerox background that's useful, it's more about how do you transform a business? Because I also spent a few years at Xerox, a senior role based close to here, in Connecticut, running corporate operations, which was basically all of the cost of the company at a time of a very large transformation for Xerox because we were separating the companies and a lot of things were happening. So I also brought that. So I've got that developing markets, knowledge and love because I really love it, but also the experience of running complex transformation. And I think both are relevant to what we are doing at Noventic to keep growing the business.
And what would you say is the missing piece for most companies that are trying to keep up with these digital trends?
Definitely cloud is a very big thing. Cloud is a big thing. I mean, if you look at the emerging markets where we operate, when we look at the kind of market size, right, we're operating in a market that expected to be 500 billion emerging markets, targeted emerging markets by 2025. If you look at the cloud business in these markets, it's expected to grow at a CAGR of 25%. So cloud is the very big thing. And then once you move customers into the cloud, it's about services. So it's about cybersecurity. Cyber is becoming a real big thing. I think up to recently, cyber was very much a topic for large global companies. The board was on the topic. They had resources to drive that. The more we look at the market now, the more we see SMBs, mid-sized businesses, taking it now very seriously. And in the emerging markets, that's a massive opportunity to bring more services to that set of customers, that segment.
And Noventic has gone through a lot of change in terms of its own geography of its operations over the past years. And so, getting out of Russia, getting deeper into India and a whole lot more. Can you walk us through a bit how that footprint has shifted over the last few years?
Well, if I make it kind of simple, as you mentioned, we basically sold the Russian business. Then after that demerger, we kind of doubled down on India. India was already a pretty large operation for us. But then we really decided strategically that having India as what I call our center of gravity made a lot of sense. Just to give you a sense of the business we have in India and the kind of the model we can replicate in other geos. We entered India in 2014. 2 employees, first year, $2 million revenue. Last year, we had 2,500 employees, $700 million of business. We are probably in India the largest Microsoft partner from a revenue standpoint, and probably one of the biggest system integrator, if I may say. So obviously, India is providing us with a unique access to a talent pool that's very, very strong, global delivery capabilities. We also had a very targeted M&A activity in India. So that growth came from a good balance mix of organic and inorganic. So we acquired a number of very strategic capabilities with companies like VPS bringing cybersecurity capabilities, a couple of others that are bringing, Amazon Web Services capabilities. So we look at India as our center of gravity.
And how much do your clients kind of differ in terms of their needs from geography to geography? Do you have a somewhat universal playbook, or do you have to do a lot of localization?
I think there's a common set of needs, if I may say, from kind of digital transformation standpoint. You look at cloud, you look at software, you look at cyber, more and more AI related type of services and solutions that are really coming. By the way, AI, it's kind of buzzword. AI exists for a long time. What's changing is the pace of adoption. Thanks to the billions of dollars of investment from the big techs and all the big companies. I saw Accenture announced I think $3 billion in tech, in AI. So all these investments are accelerating the adoption. Now, I think what's critical, it's not about is a given customer in Vietnam having different needs than the same kind of customer in Mumbai. I think it's more about how do you build that local relevance and that customer intimacy. And I think where Noventic is very uniquely positioned, if you think about it, is we have these global partnerships with the global players, Microsoft, AWS, Google, Apple, you name them. But we have a uniquely decentralized model. And I'm a very strong believer in that model, specifically in these countries. So we have local talent in charge of running the business, connected to the market, making our brand and our offerings customized enough to answer the local specific needs. So I think that model is very, very important to just be relevant to any given customer from any size, by the way, because we've got a very large basket of customers from large global to like really local SMBs.
Right. And so we briefly touched upon how Noventic has been able to shift geographically with M&A. So what are some other things that you're looking for in a target, and have valuations changed much at all in the current environment?
So to answer the last piece of your question, valuation did not change much. What we're looking at through acquisition is the following. So I'm going to take it back to our strategy, growth strategy. So if I try to articulate what we're doing, and I think it's pretty simple, we've got multiple levers for growth. So we call it a 3 or 4 dimensions growth strategy. Number one, we call it market expansion. Market means new country. Example, last year, we opened 8 new countries from Singapore to Indonesia. So we open a new country. We can also expand within a given country. India is a good example. We had a very big footprint in Mumbai. We were in 10 large cities. We acquired 2 companies that are headquartered in Bangalore. Bangalore is like the Silicon Valley of India. Having these 2 companies now, we've got 50% of our headcount in Bangalore. So market expansion is number one. Number two, M&A can help us do that or speed that up, okay? Number two is what we call capabilities expansion. So it's how through some of these targeted acquisitions, we're bringing on board very specific set of skills or very specific IP. Like we acquired a company in Serbia through one of their subsidiaries called Intelia. We acquired a very specific AI IP and a couple of solutions that we're already expanding to customers, providing to customers. So that's capabilities expansion, and M&A help us do that. The third one is, we call it channel expansion, sales channel expansion. It's really coverage. So we can go for an acquisition, might seem a bit more tactical, but it's basically we buy a footprint. We buy a customer base, we gain access to that customer base, and then we can cross-sell, upsell the rest of the portfolio. And I do consider that one as really strategic across the board, the one I call talent expansion. So some of these acquisitions really help us bring on board a very unique set of skills and very highly talented. And again, being local in these markets, we kind of bridge or cross-fertilize the kind of global expertise to real local talent, right? For the benefit of the end customers.
So there seem to be a lot of big names seeking to do what you do in developed markets. But what is the competition like in the emerging economies?
I think we're very uniquely positioned because we've got that, what I call that global approach, where we're a truly global player. We've got global assets. We've got a global brand. We've got global offerings and capabilities, but we have a local footprint, a local presence, and a local relevance. And most of the competitors we're going to face are local players. So, I mean, I won't say we're kind of playing alone. We're never alone. But if you look at a number of other companies doing kind of what we do, they will have most, if not all of their footprint in the so-called developed world. It's a different playground. We are absolutely focused in the high growth emerging markets. That's what we do for a living. We are very good at it. We know how to operate in these markets. So that's unique. And when we face competition locally, it's going to be essentially local players, and they won't have access to our total capabilities, assets. They won't have the strategic relationship we have with Microsoft. We've got that partnership with Microsoft for decades, okay? And you probably know, but Microsoft got, I think, more than 300,000 partners, out of which they have a handful of globally managed partners. We are one of that kind of small group of globally managed partners for Microsoft, which is also very important from a compliance standpoint, because, we know these markets can be bumpy, right? And obviously for us, that work with Microsoft for decades in these specific geographies means we have a very, very high level of compliance and governance in the way we do business in these markets.
And so moving back to the deal, Hervé, this is a unique SPAC deal in the way that Naventic doesn't appear to be doing it largely looking just for the cash or to gain its first access to the public markets, as it's already a publicly listed company. So why was the SPAC deal an expedient way to get this done?
I think there's 2 things, and I'm going to build on what you just said, Jerry. I think and I strongly believe we found with Corner the right partner. We're not looking at a kind of a short-term transaction. It's not like, okay, we're going to cut a deal and everybody going to go separate ways. We're in that move together for the long term. And I think we can benefit a lot from Corner's expertise, Corner's connections, as you said, specifically, I think in APAC, which is a very big play for us because India is in the middle of that APAC play. And then there's a kind of, back to, we're in a people business. There's a connection, an ability to work together and generate value. Then you've got NASDAQ itself. And again, when you look at the scale of the money at NASDAQ and the liquidity and the tech savviness of that market, you look at what we do for a living, it's kind of natural move. I think it's definitely a very natural move.
And Jerry, you did announce that you would be seeking to raise a PIPE of up to $100 million. How are those efforts going, and what is the PIPE market looking like these days? It certainly seems to be more challenging of late.
Yes, well, we did announce that like you have said, the market is a little bit difficult, but we're very excited about the Novantic story. And while we're looking to raise $100 million, the beauty of working with a team like Novantic is they have a very, very strong balance sheet. So to the extent that raising the $100 million isn't nice to have, but it's not a must-have. So again, we're very excited about the story, and we're very excited about the ability to bring Novantic to the U.S. public markets and raise capital. But the company is very strong on its own and does have enough money to proceed with its business plan and growth targets.
Yeah, I wanted to get into that too, because I'm sure as you're having lots of these conversations now, and I imagine there is a certain perception of SPAC still kind of lingering in the market there as we're kind of going through this cycle. What are some of what do you think are the biggest things to point out about Novantic and how it's differentiated from some of those other deals we've seen, but also some of the key metrics in terms of comparing it to some of the other players on the NASDAQ right now?
Yeah, well, what's interesting, a number of years ago, you saw a lot of companies and investors willing to invest in companies that had very high growth prospect for revenue, or maybe had a story and didn't have revenue quite as of yet. And those deals didn't really pan out as well as I think a lot of investors had hoped. But, we're venture capitalists at heart, and we love a good growth story. But what we really like about Novantic is its ability to show that it has a track record of high revenue growth, being able to do that profitably. And we believe that revenue growth and that profitable revenue growth is something that the U.S. public markets are looking for today.
And so this deal also includes some structures like an earnout that necessarily weren't available when Novantic listed in London. Can you touch on some of the terms in this merger that provide some upside and align with the interest between Novantic and Corner Growth?
Yeah, so we added an earnout for both the existing shareholders as well as us as a SPAC sponsor. So to the extent that if the stock trades to levels of $14, $16, and $18, the existing shareholders will benefit from an earnout structure and additional shares, as well as us as SPAC sponsors. And we really wanted to really drive that connectivity between us and Novantic to really help drive the market price and the value at Novantic, so that then in turn relates back to the shareholder.
Right. And so do you expect being on the NASDAQ to provide some advantages to getting M&A deals done?
Oh, most definitely. As Hervé has been speaking to, the NASDAQ, in our view, is number one place for technology investors, and the ability to go to a number of different potential acquisition targets and not only offer cash and a partnership with Hervé and his tremendous team, but also to offer a NASDAQ security as some sort of compensation, really, I think, makes them a stronger acquisition or potential merger candidate.
Got it. And then so on the technology side of the business, what is the thing that you're most excited about in your industry?
Yeah, I mean, again, that we have that broad kind of umbrella digital transformation. But I think we're at a point where it's really exciting is I'm hearing a lot about there's a slowdown in cloud expenses, I don't see any of that in the markets where we operate. And I don't see that because there's two or three things happening. These countries are embracing technology at an incredible pace. And you've got two things happening. One is what I call the catch up, and the other one is the leapfrog. So they're catching up with the so-called developed world, where basically in the markets where we operate, they spend, as an average, 1.5% of their GDP in IT. In North America, Western Europe, 4.5%. So naturally, they're catching up. And that catch-up is pushed by government strategic programs. India, Modi said the decade is going to be a decade for India. And he was visiting the US last week, I think, and there had a lot of discussion around technology, right? I was in Egypt, government number one project, they call it Digital Egypt. Okay. So it's happening everywhere. So they're going to catch up with the developed world. That's one. The second one is, contrary to the developed world, they don't have to carry the burden of previous investments. They don't have the old infrastructure to take care of when they want to move to the cloud or they want to build a new tower or building, right? So there's that catch up, that leapfrog, that's just super exciting because it's growing very, 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 very fast. And I think for a company like Noventic, with our expertise, our local relevance, our local footprint, that customer intimacy, that base of 80,000 plus customers that we built in the last decades, we just got the right recipe for high growth. I mean, you mentioned, Jerry, the growth, but I didn't say that, but, we closed the previous year with a revenue, gross revenue growing 52% in constant currency. So we just added, we delivered 1.6 billion in gross revenue from 1.1. So we added $500 million of revenue in 12 months in these markets.
So that's also what gets us really excited about Noventic at Corner is their ability to work in these emerging high growth markets. And like Hervé very thoughtfully said, in these markets, digital spend and technology spend is no longer a nice to have. It is a must have to compete in today's world.
Yeah, absolutely.
And can you touch on your contract structures a little bit, just in terms of, I imagine you have lots of different kinds of clients, but is it typically an annual contract, and how much is recurring? How does that all work?
So we're now to be precise, we've got 69% of our revenue that's recurring, and we're looking at two things: how much of our revenue is recurring, because that's good for forecasting, right? What's going to happen? It's kind of stickiness with the customers. So we can then cross-sell, upsell, and go back to the customers every time we acquire, for instance, a new capability. But we're also looking at the pace of growth of that recurring revenue. And on the last full year, we reached that 69% of our revenue as recurring, and that revenue grew 40%. So we're getting more and more of our business recurring and more fast growing.